Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, November the 11th, and want to wish everyone out there a very happy Veterans Day, and thank you to all the veterans for your service to this country. We are very thankful and appreciative of all of your service, and thank you so much. And last week, getting into it, last week was a strong week in the equity markets. The S&P 500 was up exactly 2.5%, and what was even more encouraging is the S&P 400, which is the measurement of the mid-cap index, was up 4.8%, and the small-cap index, is measured by the S&P 600, was up over 8% for the week. So a very, very strong week, and again, we see that leadership mantle of the small and mid caps continuing to move markets higher, as well as the value side. As we rallied into the end of last week, we finished the week up at record highs. Friday evening, we got an infrastructure bill passed in Congress and signed soon by the president. And so Monday we came into markets, and the markets continued to march higher. And that was, to give some perspective, going into Monday, that was 8 straight days of the S&P 500 having record closes and positive closes for the day. So not often do we see 8 straight days of wins in the S&P 500. So we took a pause on Tuesday ahead as we got what was called the Producers Price Index, which is the PPI number, which is a measurement of inflation for what producers are paying for goods year over year, which would be manufacturers, people that produce. And that number was up at a 30-year high at 8.2%. And markets were kind of muted off of that, and then ahead of yesterday's very important consumer price index, which is called the CPI, which is the measurement of inflation that we as consumers feel when we're going to buy food at the grocery store, buy goods from the store, things like that. That number came in at 6.2% year over year. That goes back, that is a record since that we haven't seen in over 30 years. Last month, the CPI was 5.4% year over year. So we're trending in an upward trajectory with inflation, which kind of had the market spooked yesterday. You saw the 10-year Treasury rise about 8% off of that inflation number. But what's very interesting about that is if you look at it, just 2 weeks ago, the 10-year Treasury was in the 160s and really had a retreat down, and we were continuing to get this higher inflationary data in. And typically what you're going to see in a high inflationary environment is you're going to see interest rates rising on the 10-year, but they had been falling into this report. And so trying to connect the dots has been quite the challenge, because how things normally and traditionally work in the marketplace has not been how it's been working here recently. And so what you saw yesterday is you saw interest rates up 8%. You saw the NASDAQ sell off more than the Dow and the S&P 500. Remember, going back to the beginning of this year when we talked, when you're in a rising interest rate environment, high PE, high growth, high tech names are going to get sold off for your more cyclically and value-oriented names. And so you really saw that happen in the marketplace yesterday. Now fast forward to today, we're back into rally mode. The Dow is underperforming off of Disney's earnings, but other than that, it is a very strong marketplace. And what is going to continue to keep this a strong market is, even with the 10-year being up 8% yesterday, it's still at 1.56%. So when you look at that in terms of inflation at 6.2%, well, at 1.56%, you know that you are losing essentially over 4.5% of your money in inflation, and the cost or the value of your dollar is down 4.5% based on that inflationary information. So money is leaving cash and going to places where it can get return, which is going to be in the stock market, and which is why you've continued to see the market run up and continue to move higher. Is money, and the velocity of money is looking for a place to get alpha or return that's going to exceed inflation to keep those numbers up. So as always, if you have questions about how your portfolio is positioned to deal with these inflationary numbers and data, please feel free to reach out and give us a call. We're happy to help any way we can. You can reach us at 904-346-3460, or as always, check us out online at www.riverplacecapital.com. I hope everybody has a wonderful rest of your week. Thanks so much.